All right, that's the global market action. How will these cues impact our own markets? We have been seeing a lot of domestic cues weighing on our own markets, for instance, Infosys numbers. Let's get in our research team joining in with what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Ekta, let me come up across to you first up. What is the market setup looking like today?
Thanks for that. Well, yesterday was a day where the Sensex and the Nifty snapped a 9-day gaining streak. Remember that we'd been on a strong run. We had seen weakness in yesterday's trading session on account of Infosys as well as the spillover that we saw in the entire IT space. So the Nifty IT index fell around 5%, which was the biggest decline that we've seen in a year. Infosys slipped around up to 15% on an intraday basis to record what was the biggest fall that we've seen in more than 3 years. And we have the FIIs that net sold after multiple sessions of buys. So they net sold around 533 odd crores. DIIs net bought around 269 odd crores. So what seemed to happen is that, the bubble seemed to have burst in terms of the buying from the FII stable as well as in terms of the market rally that we've seen. Let's see whether that was just a flash in the pan. In terms of the setup today, the US markets closed higher. There are earnings in focus which you had alluded to. Asia's mixed. The China first quarter GDP was flashing on your screen, which came in at around 4.5%. Oil has dropped overnight on the account of a higher dollar as well as interest rate concerns. So that should probably be a marginal positive for us. Overall, as of now, the SGX is indicating a bit of a softer start simply because of possibly the follow-on selling from yesterday as well as the Asian markets being mixed at this point in time. But do watch out for a ray of hope coming in from the financials because that seems to be really holding up with strength. Financials remain on a strong footing. The Nifty Bank was up for the 4th straight session. Earning reactions, Angel One, Just Dial, Quick Heal, lot of IT earnings to watch out for, which would be the likes of HCL Tech on the 20th of April. And other earnings this week, Reliance, ICICI Bank, Yes Bank, Lodha, MapMy India. So it would be heavy in terms of numbers, but remember that Reliance would be post-markets on Friday, ICICI Bank on Saturday.
Yes, big earnings lined up this week. Thank you so much for all those cues, Ekta. Let me talk about more stocks and get in Vivek, who's going to be talking all about the stocks to watch out for in today's trading session. Vivek?
Well, good morning. Quite a lot of stocks to keep on your radar. A lot of earnings that have come in. Also names of, some of the large block deals that happened in yesterday's trading session. So first, let's start off with Z Entertainment. Like we had highlighted yesterday, Oppenheimer has sold a little over 5.5% stake in the company. Now the buyers, there's a list of marquee names that have actually come in. So Morgan Stanley, Segante India Mauritius Fund, as well as Goldman Sachs have been the key buyers in this particular block deal. Also keep an eye out for 360 WAM, earlier known as IFL Wealth. Now what's actually happened is that Fidelity, that held almost a little over 2% stake in the company, has sold 1.4% in yesterday's trading session, and you saw the stock under significant pressure in the trading session yesterday. Also keep an eye out for Quick Heal Technologies. It's been a muted for the quarter for the company this time around, a loss of 6.6 crore versus profitability seen last time around of close to 28 crore. Revenues are down almost 52.5% on a year-on-year basis. Also, there has been a change as far as the management personnel is concerned. There is a new CFO that will be joining the company. Keep an eye out for Angel One. Angel One has delivered a good set of results this time around. Profitability is up almost 30% on a year-on-year basis. Revenues are higher by 21%. EBITDA up 30% coming in at the 385 crore mark. And margins too have expanded over 300 basis points on a year-on-year basis. Just Dial, another steady quarter from the company this time around. Revenues up 40%. EBITDA coming in this time around at 14.4%. Keep an eye out for Jubilant Foodworks, some stake sale coming in as far as the subsidiary is concerned. BML2, the land asset division of the company, would get listed day after tomorrow.
Okay, important stocks there. Thank you, Vivek, for that list. Let me go across to Nigel, joining in with the cues from the F&O space. Hey, Nigel.
Well, morning, Sonal. Yesterday we ended lower, but it wasn't such a bad session. The headline index, that's the Nifty, ended lower because the tech stocks did decline. But otherwise, the mid-cap and the small-cap indices, they did pretty well on a day when you had large-cap IT stocks that were under pressure. In terms of the Nifty open as well, it was down mildly. But the FIs, after many sessions, close to around 6 sessions, they returned to their shorting ways. So the delta out there is around 8,000 contracts. They added 4,000 short contracts and they covered close to around 3,000 long contracts. So that's why I say the move is close to around that 8,000 contracts or thereabouts. They still continue to remain net short. Short positioning though is at around 63%. Remember, at the start of the series, it was at around 90% odd. In terms of the options data, well, they bought closer on 3 calls for every 2 puts, but they are also writing calls aggressively now. So that's telling you maybe at higher levels, we'll like to see supply, or maybe we're bracing for a bit of a range, which is capped on the upside itself, because they wrote closer around 3 calls for 2 puts. Now, what were they writing? 17,700 calls, 17,800 call. Between them, they added closer on 1.2 crore shares. So aggressive writing is what we're seeing out there. What's giving the bulls some hope is the 17,700 put. Well, that as well saw some open interest build up, which brings us to the levels. As we mentioned yesterday, crucial support is at the 50 and the 200 DMA. Yesterday as well, we went closer to around 17,550 and we bounced off that. So that gives you the support zone. On the upside though, the 100 DMA, that becomes a bit of a resistance zone. If some way we can get up and moving on the Nifty first, pull up the Nifty 100 DMA, that should come up for you. And on the Nifty bank, the uptrend will remain intact till the 100 DMA can hold out. For starters, the SGX Nifty is indicating a flattish to a mildly negative start. Let's see how things go from here. But the Nifty bank holds the key.
Oh, it does. Thank you so much, Nigel, Vivek and Ekta, for joining us and prepping us up for this trading day ahead. We'll slip into a break now. Up next, we'll get you all the cues from the commodities market. Stay tuned for that.